The pre-approval process for a mortgage is an essential part of buying a home. During this process, a lender will carefully review your income, your credit history, and your assets to determine which loan products are available. In this video, we'll guide you through the steps involved in getting pre-approved, discuss how long they last, as well as some pitfalls that exist in the mortgage industry. At the Downs Group of Ella Mortgage, we prioritize the pre-approval process as the third step, following an initial conversation about your goals and a preliminary loan presentation. This is because we believe the first two steps are crucial for ensuring success. We can get you pre-approved with our technology in a matter of minutes, but without a clear understanding of your goals, we cannot properly structure a loan that meets your needs. If you haven't had a goals discussion with us yet, please schedule some time with us and check out our video, What's in a Mortgage Planning Conversation. So what exactly does a lender do when they're pre-approving a home buyer? You will see differences from lender to lender. Some have you complete an online application, while others ask you a series of questions over the phone. In either case, the information they'll collect includes details such as your full name, social security number, and birth date, while diving deep into the last 2 years of your life to include where you've lived and worked. Mortgage lending is mostly a review of 3 areas of your life. First, it's your income. Your income can be broken down into guaranteed pay, such as salary, and then variable pay, which includes bonuses, overtimes, and whatever else might fluctuate from month to month. It's safe to say that if a pay structure exists, a corresponding mortgage rule is there to show how it can be treated. Next are your assets. Assets can be reviewed for up to 2 months and will include checking, savings, investment, and retirement accounts. Lenders are primarily looking for unusually large deposits, which can highlight gifts or borrowed funds. Asset statements might also show other debts that are not reported to your credit bureau, such as co-signed auto loans, alimony, child support, just to name a few. And lastly, a review of your credit report. The credit report gives your lender the underwriting score, which helps determine your rates, PMI costs, and loan types that are available to you. The report also gives the lender a list of all monthly debts and can highlight collections, charge-offs, and other adverse events that need to be addressed before closing. Now, here's a pro tip on credit scores. Your interest rate is heavily dependent on your score. However, those scores can be very easily manipulated. We have a technology that is tied directly into the credit bureau algorithm, which allows us to run these what-if simulators. It gives us insight into exactly how you can improve your score. I've had clients with scores in the mid-600s, and within a week, they were all the way into the mid-700s. Now, with all this information, a lender will utilize various automated approval systems to issue preliminary loan approvals. These approvals are generally good for 4 months, because if the approval expires, it's just an update of your credit report and the other documents. The process of just getting pre-approved is actually quite simple. In fact, I can hire someone and have them fully trained on this step in less than 1 week. But therein lies the biggest problem in the mortgage industry. You'll hear stories of people having loan delays just a few days before closing, or even worse, being told that their loan is denied after going under contract. In these situations, I find that it's mainly because the loan officer took what was either said or entered online as the correct interpretation of the income and assets. Great loan officers ask really good follow-up clarifying questions. That's where experience comes into play. Now, at the end of a successful pre-approval, you'll have confidence in your lender's numbers and be able to provide your realtor with ideal home search parameters. Many of our clients take pre-approvals one step further, and that's where they get fully pre-underwritten. In this step, we gather all your supporting documents such as pay stubs, W-2s, asset statements, and whatever else is needed for your ideal loan program. We then have our underwriter review every document and issue a commitment letter. This is a commitment from us to you to lend the money for your new home. This step allows you to write a really strong offer, close faster, and just have the peace of mind that nothing was missed. If you have any further questions about buying a home and getting the right mortgage, please do not hesitate to reach out. We are always here to help.